Hi everybody, it's Mark Boardman here. I'm just doing a quick summary of the trades from Friday the 5th of October. It's Monday morning, so I'm just doing a quick resume of what took place in the room on Friday, just before the weekend. Now the first trade that came in, which was after all the non-farm payroll news had settled down, came in here. This was a pullback. And then a re-entry into the market after the pullback, and this was the British pound short versus the Japanese yen, and it came all the way down, blasted through the 200 moving average, and eventually it closed me out here where you can see my arrow just above the red crosses. So I always wait for the market to close clearly above the red crosses, a good 2 pips minimum above the red crosses, and when it does that, that signals it's likely to be the end of the trend. So I was out of the market there. Let me just show you where that trade originally came from. There's 3 steps. I have something called the trend catcher and trend rider strategies. Both of them have the same 3 steps. So first step came from here. This was the first trade taken. We had this purple line here. Now this is the Fat Man indicator. For those of you that haven't seen it before, it's essentially a currency strength indicator, and what you'll notice is that this is where this particular strength indicator is different to the other ones I've used in the past. Is it tells you when they are either too strong or too weak. Now in this particular instance, this Japanese yen was too weak, and you'll notice with all the coloured lines on this particular picture here that no matter what happens when they hit the top, which I call the ceiling, or the bottom, they always eventually bounce back, which means that you're ready to pounce on a trade. Currencies are not like other markets. They're not like commodities. They're not like stocks. They're constantly moving up and moving down, meandering into new trends. And so my trend catcher strategy is just that. It's catching new trends in the currencies, and I know that when these lines hit the bottom and hit the top, I'm going to have an opportunity. Now in this particular case, it was the Japanese yen. We saw this purple line here, too weak, strengthening. Now at the same time, the orange line, quite a bit before that, had started to decline anyway. So all we wanted to do was to jump on this trend, this pound versus the Japanese yen trend, which is what we did here. You need 3 indicators, and the second step is to use those 3 indicators to enter the market. You need to have red selling volume at the bottom here, right? It's the only indicator I'm aware of that tells you whether in Forex there are net buyers or net sellers in the market. You also need something called the heat map to be bright red here, and then you need your trend dots here to be red. And if you've got all 3 in line, that's okay to enter the market. That's the second step. The third step is simply to get out of the market when the market closes well beyond the crosses. So step 1 is to look at the Fat Man, look at these colours, pick the pair that you like the look of, go to the pair, wait for 3 reds, in this case a short, and then exit when the market closes beyond the crosses here. Nice and simple. The second trade that came in was also against the yen. This time it was the yellow line at the top, which was coming down. So if you just go back to where we were, we had this pound coming down. Oh, and incidentally, we could easily have taken the Australian dollar or the New Zealand dollar here. I happen to choose the pound. On many days I would take a couple of these actually, and I'll show you how this Australian dollar and the New Zealand dollar, which is dark blue, Australian dollar red, I'll show you how they played out in a moment. But I chose that pound there, and that gave me a, let me just check, that was a 47 pip move, that pound yen there. Okay, that's on a 5-minute chart, so a healthy move. And I'll show you the New Zealand and Australian dollars shortly. But the second trade was similarly the yen, but we also saw that the yellow line at the top was coming down, and that's the Canadian dollar. So that was the first step, is to see that this yellow line is coming down, the purple line is coming up, And now let's stalk that currency. So this is where you see those lines coming in the opposite direction. The market is starting to turn. It doesn't mean it's entered a new trend yet though, and that's why we always have to wait for, in this case, the three reds, again a short. So we had the red trend dot, the red heat map, and the red selling volume here, which means that we can enter the market. Now in this particular case, I got stopped out quite quickly over here, where the market turned into a very short-term uptrend, okay, and closed clearly above the crosses. As you can see here, it needs to close clearly above the crosses. Now, as tempting as it may have been to stay in that short trade, you must always 100% of the time, not 99%, 100% of the time, stick to the trading rules in your trading plan. And my trading rules say that when the market closes clearly above the crosses, I get out. So in this particular case, that was a fairly short-lived trend which came in with a very modest, there it is, 5 pip profit. The third trade that came in was the US dollar versus the Canadian dollar, taken a bit later. That's here. This came in because on the same fat man we could then see a bit later, so a bit later in the trading room, we saw this US dollar starting to turn here. We already knew that the Canadian dollar was coming down at the top, and therefore you just look at that blue line and that yellow line, you pick the pair, you go to the pair, and you're here and you wait. If that doesn't turn green or green, you don't get in the market. If it does, you're in. And in this particular case, we were kept in the market here. Notice the market didn't close clearly below the crosses, so that kept us in, and eventually the market closed clearly below the crosses over here where my arrow is, and that gave us a 28 pip profit. Alright, so just to summarize, for those of you that have not seen this system before, trend catcher and trend rider strategies, you can see them both in my trading rooms, and I'll give you the details of those in a minute. But you basically just watch this indicator here, wait for the lines to get to the top and the bottom, or to be moving sharply in opposite directions, pick the pair, go and look at the pair, and pounce. And in all three cases we got winners on Friday. Now what's really important to let you know is that these trends here, you'll catch these long trends around about half the time. So if you look at my statistics so far, the trading room has been, I've been recording the trades in the live trading rooms for 7 weeks now, and you'll notice over here I've got the stats. So at the end of week 7 there have been 42 winners and 35 losers. That's just over half of them right. And one of the things I always say in the trading rooms, and I must say this now, is that it's really important that you don't concern yourself with how many you're getting right versus wrong. That's not the important statistic. The very important statistic is this one over here. On average, what are your winners gaining you, and on average, what are your losers losing you? Now in this particular instance, my stats after a total of 77 trades show that my average winners are just over 28 pips, and my average losers are just over 15 pips. Now if I keep my averages at that kind of ratio, and I keep my winning ratio at around about 50-50, I'm always going to make profit consistently. So we ended up with 70 pips profit at the end of week 7. So we've had one losing week so far out of the 7, and so far we've made 659 pips, and that's an average of 94 pips per week. Alright, and the trading room runs for about an hour or so, so that's 4 days a week, so that's 94 pips for what is effectively around about 4 hours of work a week. Okay, and all we're looking to do is keep that consistency up. All that matters in trading is that you're consistent, and that's it. So I hope you've enjoyed this video. If you're on my database, you'll receive an email telling you about my trading rooms. The final free trading room is this week, on Friday the 12th of October. If you're on my email database, you'll get an email anyway. If you're not, then you can register by going to my website, which looks like this. Okay, this is my website, hawkeyemt4.com, and you put your email in here, first name here, last name here, click submit. You'll then get another email, which you must then click on a link in that to confirm that you're happy for me to email you. Alright, so that second email, first email will come through to you, and then after that, once you've confirmed, you'll then get the registration details from me. Alright, so just to remind you, it's hawkeyemt4.com, or you can email me anytime at mark@hawkeyemt4, or watch out for my trading tweets, which is at dailyfxtweets. Alright, so I hope you enjoyed that video, folks, and here's to another hopefully profitable week coming up this week, and I'll see you in the trading room. It starts at 3 p.m. That's Tuesday the 9th of October at 3 p.m. UK time, so that would be 10 a.m. New York time. So thanks for listening, and I'll see you in the trading room. Cheers.